Hello, everyone, and welcome yet again to another exciting interview by Financial Insight. We are currently at the Agora Village in Lusaka, Zambia, where I am sitting down with the Chief Risk Officer from Zanaco, Mr. Mutisunge Zulu, who is now become a regular on this particular show. So stay tuned for our exclusive interview right here at Africa Works at Agora Village in Lusaka, Zambia. Welcome back, everybody. As I'd indicated, I'm sitting down with Mutisunge Zulu, who's now a longtime friend of ours. Mutisunge, welcome to the show.
Thank you very much for hosting me on Financial Insights, and I'm excited to be back.
Absolutely. It's always a pleasure to have you back, but congratulations. July 18th was a significant day for you at Alliance Manchester Business School. Well done.
Thank you very much. You know, Mwelwa, I was giving a speech and I was telling parents and my fellow graduates to say the journey doesn't end here. And when my speech was entitled Change the World or Clock, and that's exactly what time it was. So it's time to impact the world and fly that flag very high.
Absolutely, absolutely. And, obviously, as for our viewers would know, obviously, Mutisunge is a graduate of Alliance Manchester Business School, where I also attended, as well as Harvard Business School. So, we always get a chance to sit down at the end of every quarter. This one has taken a bit long because we had to give you a chance to obviously go for graduation and all. But, Mutisunge, I think let's get straight into it. Obviously, the quarter two was obviously very eventful from a global perspective. Could you kindly share with us some of the landmark market events that are worth analysis, as well as just giving a perspective from what you're seeing as the top key risks that the world faces currently?
Thanks, Mwelwa. So the theme hasn't changed. There is quite a lot of uncertainty globally. Geopolitics is still featuring. We've seen geopolitics morph from one war to the other. We knew about the Russia-Ukraine war. And there was tension in the Middle East. The world was almost at brink of war. I think this was going to be dubbed the Third World War. Tension between Israel and Iran. And you can imagine while all this was happening, the Hamas tension was still there. The Houthi attacks were still there. So geopolitics still has displaced all risk types, including climate change risk. The importance of this war, or significance, I must say, is that it was going to impact supply chains, Mediterranean sea routes, the Jordan, and all those routes that account for 20% of global sea trade was going to be disrupted. There was expectations that crude prices were going to skyrocket. We saw crude hitting $75 a barrel, and there was a forecast that if the war was full-blown, then we would see $150 crude. Middle East oil, synonymous. Aside that, it was a humanitarian issue. There's displacements, lives are lost. It leads to fragmentation, inflation, and arguably, base metals were actually going to take a positive cue because the likes of copper, titanium, aluminum were actually going to go up because these go into production of weaponry, infrastructure. Thank you, or thanks to God for the ceasefire deal, because we didn't get to see all those risks actualize. But while all that was happening, the world is still grappling with climate risks, temperature issues. Sometimes it rains too much in certain places. Tariffs have been topical. We thought that tariffs did subside, but they're back. A number of countries, including India as well, have been slapped with tariffs. I think the most important of all that point back to home would be a 50% tariff on semi-processed copper into the US. We don't export our copper to the US, but it does affect everyone within the value chain.
Right.
So in the immediate, the expectation is that you're seeing copper trades healthy on the London Metal Exchange. think last I checked was $9,731 a metric ton, which is a good thing, and it gives FX support to exporting nations like Zambia, DRC. In the intermediate, it starts to recalibrate supply chains because everyone now prices in a premium.
Correct.
Apparently, what is now being said is that copper is not just a commodity, it's a strategic asset, because you can't talk EVs without mentioning copper. You can't talk war without mentioning copper. You can't talk climate issues without mentioning copper. And at the same time, you and me have known copper to be the bellwether for global powers. And I also say it's the bellwether for Zambia's growth powers. So yeah, so that was actually seen within the chains, and a lot of fragmentation. Countries are taking sides. There's tension, there's uncertainty. It's manifesting in what I would call the strength of the dollar. We did see an interesting trend. The dollar was weakening. I think it did hit 93. That's for the dollar index against the basket of 6 major currencies. It started going up. It's about 98.25. When you start to see a weak dollar, it's an indication of exactly what's happening in the world. So we've seen a deviation between the strength of the dollar and US treasuries. They would move in the same direction. But this time, they didn't move in the same direction. Treasuries were going up. I think we did see treasuries hit 4.75%. That's for 10-year paper. And as the dollar was continually weakening. So this diversion was because the chaos is coming from the US this time.
Right.
Yes,
Right.
it's coming from the US. So
yeah.
most players exited positions, risky positions, and we're now moving into safe haven assets. But the definition of a safe haven asset has also changed, because one of the safest havens was the dollar itself.
Correct.
But people now prefer to hold their liquidity in other assets, even coming to emerging markets, because they feel like it's safer. Policy predictability has become very topical in the US because anything can happen anytime. And hedging is one area. Volatility in derivatives as well, because on one day it's this, the next day it's another shift. So I think that's what the world has been exposed to. And stock markets reverberated, reacted in different ways. There was excessive volatility. People lost money, people made money. In any market, people will lose money and people will make money. But ultimately, it has shaped posture of how people are positioned, and negotiations have continued. Other countries have decided to retaliate. And I think China has been fairly quiet, but because of all this, global growth focus was cut to about 2.8% from 3.3%. And when you start to see such numbers, then they filter through commodity markets. Like your oil prices sag a little bit, which is a good thing for us, if your oil prices come down. And yeah, it's shaping how liquidity flows are moving. So you get more flows into emerging markets because, yes, from a political or sovereign perspective, might seem risky, but I think it's kind of stabler than being in the US right now. So geopolitics is going to be a top risk for quite some time. Right. So as long as those wars don't end, we'll continually see markets price in. So they say markets have priced in a political risk premium on copper, political risk premium on crude. Yeah, so that's what the world is experiencing right now. So yeah, and divides, you know, those decisions that were made where aid was cut. America is more interested in doing business with Africa than aid. So the aid discussion is fading right now. It's more about, are you ready to do business with us? And how much business can we reciprocate? Africa is well positioned. There's the Lobito corridor discussion. There's the EV discussion, but the EV, not so much on the US, because you know what their stance is. Climate change is a hoax in the US, and yeah, but with China, it's still continued. So the EV discussion is still there. And in a nutshell, I'd say it's a global village. You have to be interested in what's happening in the globe. There's nothing like you're in Africa and it does concern you because your capital flows, markets, commodities. So it's sort of a risk-off mood that we saw. And people were shying away from risky assets because they wanted to see what would happen. So in a nutshell, that would be a wrap-up of global market reaction.
Now, Mutisunge, obviously a lot has been going on.
Yes.
Zambia itself just recently had its, the fifth review of the IMF. Despite all of these things, going on globally, the release of the 160-page report about sovereign health of the country. What's your commentary around that, and what exactly is in that report that is obviously pertinent for Zambia, and overall, how did Zambia perform at the fifth review?
So I'll sum it up with a statement. We're still at high risk of debt distress. So not yet out of the woods. Again, not still fully de-risked. So we're in the middle, right? Performance, satisfactory. We met 6 out of 14 benchmarks. The other 4 were met still, but with delays. So that's 10 in total.
Okay.
The other 4 were pushed to the next review period. From a revenue perspective, we did great on mining tax revenues. Not so great on non-mining tax revenues. We missed the mark. Reserves are at $4.5 billion, but we still missed the mark. So that tells you that the expectation is that we need to build higher reserves than where we are sitting.
Right.
A few issues were raised. Structural reforms, progress has been made, but more can be done. A lot of policies that have been implemented are people-centric, especially on the social side. You have to cushion the vulnerable in times of volatility. Domestic debt has ballooned 14.7% year on year. We're sitting at 260 billion kwacha of domestic debt.
And just to put it in perspective, by domestic debt, you mean bonds? Okay.
Inclusive, yeah.
Yeah.
Maturities are coming up, they have to be funded. That's 681% in the last 10 years. I think that's the biggest risk that we're facing from a sovereign perspective. How will domestic debt be dealt with? God forbid that we get to a point where the haircut discussion comes on the table. I read an article yesterday where the minister was warning that if that came, I think it would really hit the banks. It's got implications. Ghana took 30% haircut, and we don't want to get there. So we have to do whatever we can as a nation to make sure that we don't get to that discussion. Mining was loaded. IMF did acknowledge that mining is improving. Production is going up. We're looking at 17.9% first half production, which is about 436,000 metric tons. And that's at half year. So if you multiply that by 2, it tells you that we're closer to 900K. And they add production from smaller players. So 1 million metric tons is achievable.
And the president did forecast that.
Yes. So production in copper going up, your copper price also going up. Allow me to deviate, Mwelwa. I didn't mention that what really is driving the copper price right now is AI driven demand from data centers. A lot of people are ramping up data centers.
Right.
That's number one.
Okay.
Demand a lot of copper. The second would be there is a copper deficit globally. There are new mines, but the transition it takes for the new mine to start adding to production is what is contributing in part to the deficit that we're seeing right now. So that's on the supply side. And then there's demand for copper for weapons and bullets and that infrastructure. So that put together, and the EV, which is a measure to decarbonize the environment, is what is keeping copper healthy above $9,500 a metric ton. For Zambia, that's a good thing because from a cash flow perspective, it means that the government will collect more in mineral royalties, and then they are able to meet things like reserve buildups, hopefully in the next review, will exceed the target and we'll be able to service our debt external, which is FX, and provide support to the currency. So in the mining space, $1 billion was committed. That's FQM. It's a good thing, but it's exciting because you can imagine if you get that 1 billion through the veins of Zambia, then clearly the economy will feed it. I always say what we always lack in Zambia is flows. Once you get flows, money is exchanged. That's what drives growth, and not money sitting in deposits. The money has to be exchanged. But just think about the copper belt. When mining booms, how many downstream businesses will come back to life? That's an indication of growth powers that lies ahead of Zambia. Yeah.
Right. Now, you've obviously highlighted in your response, some of the sovereign risk concerns. But I'll turn my attention to in terms of the extended credit facility expiring this October. Has your view changed since the last time we spoke?
Okay, I said it was going to be one risk. It was a sovereign risk because there has to be clarity around what happens after the 31st of October. Reason being, it is your ECF agreement with the IMF that gave comfort to bondholders to agree to a restructure. So look at an ECF as a de facto guarantor. Like, we are guaranteed that for as long as you're on the program, you are going to exercise fiscal discipline. And one of the areas would be keeping your costs low, but generating more revenues to be able to meet debt repayments. When that expires, it makes investors nervous. There would be a blowout of credit spreads in the international capital markets, and that's something that we wouldn't want for Zambia. So that was going to breed credit risk. So fast forward a couple of months, we're told cabinet approved discussions for an extension, the extended credit facility by 12 months, and should that get approval by the IMF, because the Zambian government has to formally engage the IMF. Then Zambia could be getting an additional $145 million to cover this period, which is, I call it an election hedge. When you're getting to an election, there's always fears about spend. It's not just for Zambia, it's globally. There's a lot of spend you get during inflation periods, and where that spend comes from determines whether or not your interest rates will go up, your exchange rates. When you're contracting debt, we don't know, but there's all that uncertainty, and the macros usually move in a certain direction. But with that in itself, I think that would be a good thing. And I think, let me say it this way, it's a testament of maturity of our fiscal authorities to admit that there is a problem and they're doing something about it. I know that it's been received with mixed feelings, but let's face it, Mwelwa, we deal with facts. We need it so bad to cover that period, to calm investors, and to get Zambia onto the next 12 months. And after that 12 months, I think we'll still have creditors, we'll still have our bonds running, and I think we may still need a facility to just sit in there as a guarantee, because I know that by the time we're getting into next year, copper production would definitely be higher than where it is right now. So from a cash flow perspective, it would be a great thing. And I think Zambia is a shining example. Look at our debt to public debt to GDP, from 153%, from 123% last year to a forecast of 91.9, Mwelwa. And then we move to 79.2 next year. And then we get to 69.5 in 2027. And that's where the rating around, we are graduating to medium risk, and that tends to create fiscal space. But let me also state that it's not a government responsibility. They have created a conducive environment. So let the private sector thrive. Let them do what they need to do, because that fiscal space is there. You have the government now be able to fund projects without getting into debt. Or even if they did get into debt, I believe that lessons have been learned. The debt must be used for capital expenditure that generates revenues, that self-liquidates obligations. So exciting times ahead. And lastly, I would say macroeconomic indicators, Mwelwa, do take time to manifest. People expect that because there's a pronouncement today, tomorrow you must see macros coming. No. It's moving parts. So even this momentum, the risk is that if we don't stick to this momentum, the macros will just, go amok, will fail to service debt, and we're not yet out of the woods. There's more work that needs to happen, only that we as a nation have been steadily dedicated, showing resilience. Remember, who posts a growth of 4% coming straight out of a drought, the worst drought in 40 years, with those energy issues, and post a bumper harvest? It's exceptional. So clearly we can do more. If you go into the agri space, you'll be told that the target now is 10 million metric tons in the next 5 years, because Zambia is positioning itself as a net exporter of grain. So gone are the days we just produce what we need to feed. Our feeding capacity is 2.5 metric tons. When we hit 2.5 metric tons, we have done 2.5 million metric tons. We haven't done much. We need to go the extra mile. DRC people are willing to buy our commodities for 5 times the price. So commodity trading, the horizon, this thing is coming, and there's a whole lot of things that are coming. But I would say that in a nutshell, if you read that 160-page report, the summary is that performance satisfactory. We were the first country to undergo restructure under the G20 common framework. So we are a testament. Other countries that will come and sit with us to understand how we did it. Shining example, from default to a shining star. Every other article, every other day is Zambia. Zambia is still a darling to multilaterals. So the World Bank, the IMF are all raving about Zambia's performance. So it's exciting times we are in. Not to say that there are no risks. Risks are there. Execution risk is there. It was one of the risks that are in that document. All these reforms need to be followed up. So in the energy space, it's not enough to just talk about net metering and open access. We need to back it up with infrastructure that will support Zambia's baseload production. We can talk about solar. You can't run a mine with solar. You can't use solar for manufacturing. So what we need is to ramp up our baseload production, and that should get us in good stead. This mining that is booming needs energy.
Correct.
If energy is not sorted, we'll have a bottleneck, and then mining will not be able. We have a 3 million metric tons by 2033 or 2035. But without power, we won't be able to achieve that. So we need to put our hands to the plow.
Absolutely. Now, let's turn our attention now to, back home in terms of economic growth. You've already alluded to the 4%, but then also the improving macros like inflation. Inflation has obviously been easy. The maize bumper harvest you've touched on, as well as a stabler exchange rate. What is actually fueling this?
Okay, let's start with inflation. So inflation coming down is a function of food prices that have come down steep. Inflation is a metric. So we're looking at year-on-year inflation, significantly come down because food prices have come down. Right. With a bumper harvest of 3.67 million metric tons, we expect that mini meal prices will come down even further. That's maize meal. So the expectation is that Zambia should close the year with an inflation of 11%. Inflation is linked to your monetary policy. Monetary policy is inflation driven. So when inflation starts to come down, then the odds of expansionary monetary policy in rate cuts start to widen. Growth, 4.5% is remarkable. There's your mining, there's your banking sector, it needs to fund. There's your tech, they call it ICT, I prefer to call it technology. Manufacturing, all in rebound. We're seeing all that. And this, think of it as a sprint. 4.5, it makes 5.8% a possibility, which the IMF is projecting. It makes 6.2%, which Ministry of Finance is targeting, a huge possibility. We've seen private sector pause in positive territory, 4 months back to back, though it's softening. For July, we're looking at 50.1. We like to keep it above 50, and that gives you a level of comfort that there's expansionary activity happening in the manufacturing sector. However, entities are still grappling with power issues. There is still load shedding. It hasn't gone out. So I see that there's quite a bit of noise around solar energy. Right. But we would like the same noise around baseload. Baseload drives manufacturing. Baseload drives mining. Exchange rates from 28 to about 22 and now getting to 23. There's been stability in that space. Well, there could have been more stability if the central bank were allowed had enough reserves to offload onto the open market and bring it even further down. But we have to be very cautious in that area. Remember, your reserves are a buffer for a rainy day.
Correct.
So yes, we've seen the central bank come into the market 1 or 2 times, sell that, but there's been confidence, there have been flows. Part of it is what is happening on the global scene. People are now coming to Zambia as a safe haven destination for their capital. If you look at what our government securities are paying, people are interested in our government securities as well. So they want to lock in and that. So that brought inflows as well to a large degree, and that has sort of added onto that momentum that we have seen. We still have structural issues, Mwelwa. We have not yet arrived. Your exchange rate is merely a price. That is showing you the equilibrium between supply and demand at that point. But just know, I always say this, Mwelwa, do not proxy growth for, is it exchange rates or the opposite? When this economy is growing, you're going to see machinery coming. You use dollars to buy that machinery.
Correct.
That's the point you also start to see dollar demand go up, and you start to feel depreciation pressure. Until we get to a point where we sort out the structural issues, we manufacture more, through value addition, we export more, and we get more in reserves. And that's why the discussion around copper production going up and downstream businesses as well, and the value addition kicking in, is what is really going to help us keep our exchange rate stable. If the exchange rate is not managed, that's another source of inflation, because your cost push inflationary effects kick in.
Correct.
Prices start going up, people start speculating, and then inflation comes back, it erodes value. So right now, we're in a good space. Yeah, I think that's about the major metrics driving.
You've touched on copper, and obviously, copper production is up by 18% at a time where LME prices are obviously fairly elevated. What are your comments around that and Apple?
Yeah, so like I mentioned, in the medium to the long term, we're going to see copper reverberate between 10 and 12.5K in dollar terms, because data center demand, AI technology is here to stay. Right. And storage is also here to stay. So data center demand, EV demand, I think China is really manufacturing EV cars, and that's taking up quite some demand as well. The confusion, I don't know when it will ever be sorted, but for as long as there is tension in the world, you can expect that. Yeah, so healthier copper prices are seen in the now, medium to the long term. So I think in the next 5 years, you expect healthier copper, even higher than these prices. And that's why we shouldn't miss this wave. For Zambia, it's exciting because guess what? There's some significant projects. Talk about the S3 project,
yes, which is
the Super
week.
Pit.
Yes.
It's exciting, Mwelwa, to see a number of mines come back to life, which is a testament of a leadership that led to the addressing of the legal impasses that we had, equity ownership. When Mopani issue was sorted, KCM was sorted, Luansha Copper Mine sorted, the China Jiangxi guys, Lubambe as well, your FQM, and everyone is coming to and everyone is just firing on all 6 cylinders. Can you imagine if Mingomba also adds to production? Because they're making very serious strides. So, and the geo mapping survey that was done, I know it's not completed yet, but I think at the mining industry it was shared that some of the results are very, very positive. We saw a lot of reds, I don't know if it's red or orange, and we're told those are minerals there. So you can imagine that the stock, we actually have more minerals than we thought we did have. There's discussions around gold. Just for humor, I'll tell you, somebody was saying, you know what, I don't understand. Our friends north have gold. On the other side, on the west, they have gold. The guys down there have gold. So how is it that we in the middle don't have gold? There must be a gold body sitting somewhere. And it's a testament of what we're seeing. There is this gold discussion. Probably in the next couple of years, we can see the Kinshasa road talking about gold. And we have a lot of minerals here and there. And there is this awakening that is just happening where a lot of Africans, including Zambia, are getting to realize that now we have to stand on our own feet and make do with the resources that we have and eventually drive this economy forward. So in the mining space, it's really, really happening. If you just look at the traffic into the Copper Belt, trust me, you will be shocked and amazed at how many flights there are into Northwestern Province, into Ndola. Flights are full because everyone is flocking there. I actually noticed this at the point where I couldn't even correlate this with any activity that I was seeing. But if you get into the hotels and you listen to people's conversations, then you will know that these guys that are coming here are not from Zambia, but people are investing, and very soon it will start manifesting in increased production. So exciting times for Zambia. I'm more excited about downstream business because if you look at, like I said, there'll be demand for energy. Baseload. I don't know how many times I've said baseload in this interview.
A number of times.
Baseload. We need real estate. People need to feed. Agriculture. Apparently, there is a section of agribusiness that is shifting towards the copper belt, and that is to service the population around there. So there's quite a lot that's happening, and all that is anchored on mining. Sulfuric acid, all these small. Everyone is going to want to be a supplier at some point, but yeah. So mining is really happening for Zambia, Mwelwa.
Absolutely, absolutely. Now, Mutisunge, I know we're running out of time, and I know you're in between board meetings, etc. But by coincidence, we always host you just a few hours before the monetary policy statement. You know, I was going to go there, and you obviously two predictions in a row. What's your take on Governor Kalela, who's obviously sitting with his MPC committee right now ahead of tomorrow's third monetary policy announcement for 2025?
Can I back it up with some
absolutely,
numbers?
Absolutely. Yeah.
Inflation is coming down. Like I said, when inflation is coming down, it's a signal that the odds of expansionary monetary policy are widening. Look at the government security curve. It's come down significantly.
Correct.
Interest rates are far lower, term funding down. Exchange rate stable. This is in the domestic market. When we go global, how insulated have we been from most of the things that are happening? I'd be worried about copper, but the prices are fairly healthy. Production is going up. So you can see that to some degree, we have the shield and a buffer towards some of the headwinds we are seeing. Of course, we're still grappling with energy deficits, but it's not as bad as it was last year. The odds of a rate cut, I would say 78%, Mwelwa, of a rate cut. And if there was a rate cut, I would say it's 50 basis points. They want to do it in piecemeal and understand. So two things. They could either keep rates unchanged at 14.5%, or they could start to loosen monetary policy by maybe 50 basis points to 14%, and then look at what this quarter has, and then eventually loosen it. But I'm still concerned about the elevated cash reserves. 26% is pretty much high, because then you have a lot of liquidity tied up, but then there are also other factors at play. But I think that if I compare last MPC meeting to this MPC meeting, I think the macros are looking better. But there has to be a balance between your monetary and your fiscal policy. Fiscal policy is now not where it's supposed to be, but in a far much better position. And I think that we could now start to see monetary policy clutch in and respond positively rather than adversely. So 50 basis point cut to rates unchanged is what my prediction would be.
Right. No, thank you so much for sharing. And again, we'd like to thank you for coming to the show again.
Thank you, Mwelwa, for hosting me. Always a pleasure to have this discussion. You know, we can talk the whole day. But...
Absolutely, absolutely. All right, so there you've heard it for yourselves. So I've been speaking to Chief Risk Officer Mutisunge Zulu from Zanaco Bank, who's just shared with me key insights from H1, or rather Q2 2025. So for more insights, please subscribe to our YouTube channel and all the financial insight platforms to hear more about what Mutisunge and other key experts that come on the show. I've been your host, Mwelwa Chibesakunda, and as we always say at Financial Insight, get to know.